Hi, it's Tony Joe from Remax Camosun here in Victoria, British Columbia. It is June 21st today, and something has happened. The Bank of Canada has made announcements that they are making changes to lending practices out there, and this will have a significant impact on people who are thinking about buying real estate. And what I want to do with this quick little video is illustrate the differential that the change in amortization is going to have on you if you're thinking of buying or the market in general. Anyways, I'm using a couple of quick figures here. I thought we'd compare based on a $400,000 mortgage, and based on rates, so on a 5-year 3.09% mortgage, which is common today. I want to do a comparison here between what a 30-year amortization is and a 25-year is, because as you know, what the Bank of Canada has decided is that on high ratio mortgages, they will only lend a maximum of 25-year amortization, whereas it was 30 up until now. In fact, it was 40 for some point in time, but anyways, this is what we have to work with. The calculations on a $400,000 property based on 3.09% on a 5-year term today would be $1,701.62 on a monthly payment. Now, when the calculations apply to a 25-year amortization, the payment goes up to $1,911.50, which, as you can see, is a difference of around $210 a month. The significance here is to buy the same property on a $400,000 mortgage, you will need to pay $210 more. Now, of course, it doesn't mean that the rates are up. The rates still remain the same. It does mean that you're going to have the property paid off a little sooner, which is the good news. The bad news is, in order to support this $210 a month extra payment, you need to have a $5,800 increase in income. So $5,800 more in income to substantiate that $210 a month. Or another way to look at it is, on your $400,000 mortgage, once the amortization period is reduced, you will all of a sudden only qualify for a mortgage of $356,000. So what that means is after July the 9th, which is the turnover date, you could have bought a house using a $400,000 mortgage, and you'll only be able to buy a $356,000 mortgage. So what does this mean? In the short term, it means that we are going to see in the next couple of weeks a flurry of activity, because there's going to be a lot of people who are qualified and want to buy with their 30-year amortization. So for the next couple of weeks, we're going to see some sales happening. After that, if you're thinking of buying, unfortunately, it's going to affect your qualification. It's going to affect your ability to buy. So you're going to be able to buy up until July 9th at $400,000, and afterwards $356,000. There's a couple more things as well too, like the calculations of gross debt service ratio and total debt service. Those are things that will be adjusting as well too. Speak to your mortgage broker about these things. But the bottom line is it chaos? Is it mayhem? No, not really. Really, it's just the Bank of Canada, again, doing what they can to make sure that Canadians don't get into much further debt. Obviously, they don't want to be into the situation like our neighbors in the south there in the States. But at the end of the day, it's the same story as always. Do not overextend yourself when you're buying real estate. A lot of people that come and see us say that they can buy a house up to, say, $800,000, but they only want to spend $600,000. That makes sense. Don't overextend. But again, these are the numbers. If you have any questions, please give me a call or send me an email. Otherwise, I guess we'll be talking to you after the changes.